The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 2nd, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. Of course, you can send me an email, steve@tfnn.com, and inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 59 points at 21,056. S&P is off 9, trading at 2386. NDX 100 down 22 points. The composite off 28. The Russell down 10. Semis are off 6 points. Gold is down $17. Silver's off 67 pennies. That's 3.6% to the downside. Light sweet crude off a buck, nearly 2% to the downside. Lead the charge here to the upside. You've got Monster Beverage up 5, Ion Pharmaceuticals up 5, Air Methods up 4, Children's Place up 4, Priceline up 4 to the downside. NetEase up $11, nearly 4%. AutoZone down less than 0.1%. That's $6. Grief is in GEF as a ticker symbol out here. That's down 9%. Not a good day. Good grief is all we can say. So what are the markets doing? What are we going to be watching? Well, I tell you what, the markets are just weirded out. Some of those tools that we've sort of put in the closet here, you've got the S&P is down 10 points. You've got the spot volatility index is down 6%. It's down today, too. Talk about weird divergences out here. And that's all we can say. If we do, just go ahead and check in on that volatility index. Why? I don't know, just for the heck of it. But we don't ignore it, but my goodness gracious out here. One thing we know is trading below the 50-day exponential moving average. We're just going to stick that off to the side. What else do we know? Well, one thing that we still know out here is we still have a rising bottoms pattern inside of the VIX index. So in the past, that has been a precursor to a market that wants to have some type of decline, pullback out there. So let's continue at least with regard, and it's not used as a timing tool, so that much we know. But let's continue with that theme. Is it possible that there is that the retracement that will take us into April is actually beginning as we speak right now? And there's a number of things that we can look at. So let's go to the simple things. Let's do the old simpleton test out here. Let's just go see what the advanced decline oscillator readings are inside the New York Stock Exchange. Down below zero again, minus 60. Yesterday popped above zero. This actually says the message of reading that advanced decline oscillator now says, talk about simple, it's a simple structure. This says that buyers were actually never in control of the market yesterday. That is how you would read today's, and this is 1:10 in the afternoon, but that's how we would read it today. We have a declining tops pattern in here inside the advanced decline oscillator. That is never a good thing. Never a good thing while price is headed higher out there. That's a divergence that works well. Inside the NASDAQ composite, oscillator reading, advanced decline oscillator reading, back below zero. So believe it or not, the message is, we just get the smoke signals are that buyers, even with yesterday, were never really in control. Now, inside the Dow, we got a declining tops pattern, but that advanced decline oscillator still is above zero. So a second or a third to the motion says, nay, not just yet. And inside the S&P 500 with the VIX index being below the 50-day, so the number to be watching here today on the close is somewhere around 1196. You close back above it, that has got to make you say, something to think about. So that is phase one out here, right? We've got that we're going to take a look at with regard to what the markets are doing. What is phase two? I'm glad you asked me that question. Phase two is very simple as well. If we take a look at the 30-minute chart here for the ES, made one of your favorite short-term topping patterns, as well as bottoming patterns, but in this case here, topping pattern. How did it do that? Price move higher, does with less relative energy. Therefore, my system draws that nice little black line to let me know, hey, based on my parameters, here's the signal that says top may be in order. Now, when you get that bearish reversal signal, as we did here, that's a Three-River Evening Star, named after that great commander, Oda Nobunaga, so that was the signal for price to move lower. Now, Oda Nobunaga, he is up against a line of defense. That defense, we have this nice little hammer candle form out here at about 12 noon. 11:30 to 12 noon out here, and it's also wave number 6. What also was occurring simultaneously, actually not really for another half an hour out here, is you have the Stevie's red line converging with that blue and green line out. That meant that the price oscillator was at the zero level. Now, typically when that occurs, this is subtle, but this is where we're likely going to see the next message. When that occurs, you typically see price stall. You see it stall, and then one of two things happen. The most bearish, believe it or not, is a counter trend rally up into Stevie's red line. It's in the 2389 area. You move up, you test it. Now, it doesn't have to do it right this second. So you want to be watching for this as the rest of the day ensues, because any move lower may just be a test of the bottom of that hammer candle, may also get us to wave number 7 out there. That can be a bottoming signal. This is the ES mini that we're talking about on a 30-minute chart. However, if price moves up, and I don't really care about wave number 7 I care about it, but right now, the more important pattern here is, does price get up and test Stevie's red line? That'll change throughout the next few hours. Right now, about 2388, 2388.50 or so. Does price get up there, test it, and reject it? You see, a test and rejection, that's going to signal to you and I lower prices to come. It is really that simple. Now, that then says, well, and if lower prices are to come, and you've got this little topping pattern out here inside the ES Mini, all right, that says, well, what's the S&P 500 doing? So I just have to leave you right there, right now, until we come back from this breakout. But in addition to now going to the daily chart for the S&P 500, which we'll do, I also want to go take a look, in my opinion, at the NDX 100, because that is generating a similar sell signal to what you and I just looked at on that 30-minute charteroonie. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 59, S&P is down 10. So we're just trying to navigate through these markets out here. And with regard to just going back to the ES Mini as an example out here, and this is where it gets a bit tricky. If we just take a look at the daily chart now for the ES Mini, we do know that price is still traveling well above, I do mean well above, it's a TAS daily profile high out there. Now, that was a market profile that had a bias to the sell side. Sellers were in control. Old resistance could become new support, or should become new support. And that level is 2370.75. We are good 15 points higher than that. Not until you get a close inside that box again is there any type of signal from this indicator that price would pull back to 2343. So that's its message. As we take a look at all four out here, the NQ not yet tested the top of its box. That's 53.61 and a quarter. The Dow, barely a movement inside of the Dow out here. It's got a long way to go, 26.32 out there. And the weak link, if we want to call it the weak link, has really tested and rejected the top of its box out here. We'll just go ahead and explode this up. So it's really just come back to a level of support, 1400.55 is the number. Remember, there's a 10-minute delay on this, so maybe it's printing right there or just slightly below it. I don't know the answer to that. So those are also levels that you'd want to be looking at. But I mentioned let's go take a look at the indices. Did I mention that? I did. So inside the S&P 500, what we don't have out here is we do not have any kind of bearish reversal signal. Today is just a pause button, meaning it's an inside day, meaning it's trading with inside yesterday's candle. In this case here, really the body of the candle. Does that matter? No, not really. It just needs to travel with inside the low and the high. And typically that means that the trend that is underway will continue. Just a pause in price action. In order for the S&P 500 to give us a signal, an additional signal that maybe a short-term top is in, you would need to see it close below Stevie's red line here, 2377.62. We haven't even got down to test that level, so no bearish signal there. However, there are a couple of indices that are worth noting and paying attention to. One of those being the NDX 100. As we take a look at the NDX 100 now, we can see that it formed the same type of top. Now, this is on a daily chart, though. So far has formed it. So it really depends on what today's action is like. Price moving higher, doing it with less relative energy. Now, you'll see my system automatically draws those black lines, so then I don't have to go calculate it myself and figure it out. And you'll see the drawings of these black lines all the way back here, starting with, looks like February 8th. But just because that pattern is drawn does not mean that is a sellable pattern. Just means that it's a fork. It's just it's my own weather forecaster out there that says partly cloudy, might rain, take an umbrella, or something along those lines out there. And then, of course, I say to my mom, God rest her soul out there, hey, but Johnny down the street is not taking an umbrella. And then, of course, you know that you probably have been down that path before. Nonetheless, here we've got a reason to open the umbrella. Yeah, the NDX 100 is saying that. Guess what? We're getting a confirming signal today as we speak right now because we have a bearish reversal candle at that pattern. Just like we had Oda Nobunaga back on the 30-minute chart, here we just simply have a bearish sash candle. Which one is more bearish? They're both bearish. It's just that simple. They're both topping signals. Now, where does price pull back to? That's a different story. You like to see confirmation on the very next day, but right now the NDX 100, believe it or not, is giving us a sell signal. Depends on where things close. Oh, by the way, price is trading down below Stevie's red line out here. So that's signal number one. We have the same signal, by the way, inside of the old NASDAQ composite out here as we take a look at it. It, as we speak, has got a nice little bearish engulfing candle. It happens to be trading below Stevie's red line out here, and that is after moving higher with less relative energy. Now, perhaps on both of these, yeah, let's go back. So both of these are doing the same. We also have this competing bullish reversal signal, the gap up from yesterday. So really, as an additional confirmation, you need to see that gap fail. Because just coming back, remember, gaps are your friends, right? They are breakouts. And until the breakout fails, price is just coming back into a breakout. So we do have some competing patterns out here right now. And look, if this is the start of a top, you do not have to jump on board right now. You want me on that wall, right? You want a confirming signal out here before you go ahead and put your money at risk. Because if, in fact, this is, the top is going to last longer than most people believe. And so it's going to be plenty of counter trend rallies. And even if there's not plenty of counter trend rallies, you can jump on the momentum once we get those confirming signals. So we've got some signals inside the NASDAQ composite, inside the NDX, whatever they say, hey, take your umbrella as we speak right now. Now, for those of you that have stuck with the mining trades out there, I have a bit of pleasant news for you. Well, maybe some is pleasant, maybe some is unpleasant out here. Remember, we were taking a look at the 30-minute ES mini chart. We were taking a look at the convergence of Stevie's lines out here. Well, we're starting to see a convergence begin to take place. That means soon. Doesn't mean today. Doesn't mean tomorrow. But soon as these converge, we should see price stall. The real key is going to be, and it was a good question. I know somebody out there asked, say, hey, Steve-O, inside the ES Mini, if price comes back to your red line and then just keeps on cruising through it, what does that mean? That means uptrend, back in place, buy, back up the truck, load up the truck, because prices are going to go ahead and move higher out there, because that would be a test of a area of resistance that will have failed out here. So we've got a convergence, and this is in the XAU. The GDX probably looks slightly different, but I thought I would just go ahead and put that out there. Now, with regard to other markets, are there other indices giving us any signals? Well, the transports are. Transports similar to the NDX 100, similar to the NASDAQ composite. In this case here, we don't have a gap. So the transports, if they have some follow through tomorrow, and if they close about where we are at right now, then that's giving us a sell signal in the transports. You'd look for the prior, your targets would become your prior swing points with regard to reward risk areas, things of that sort. So we're seeing a few things. Oh, by the way, the semiconductor out here, semiconductor index, what do we got? We have a seventh wave move that confirmed 5, 6, 7 days ago. Today it was nothing more than a test of Stevie's red line. It failed. That was resistance. So this has given us a sell signal. So you can see we've got a number of sell signals that are out here. There's a reason to have that umbrella ready to go. Also inside of the financial sector, I don't care what PIMCO did or didn't do. I just know how to read the technical patterns out there, as do you. And in this case, I've got the financial sector in wave number 7 as well, 7 or 5, but I'm going with 7. Nice little bearish engulfing candle. Now inside the XLF, it has the same predicament, the old fly in the financial ointment, so to speak, with regard to having a bullish gap up yesterday. So the signal is not clear. It's like the tug of war, and that knot is really right in the center. The bulls or the bears are going to win here, but boy, the bears are doing everything they can to try to take over the game. Steve Rhodes with TFNN. We'll be right back. We'll go take a look at Goldilocks and silver and anything else that you'd like.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome Welcome back, folks. So let's go take a look at Goldilocks out here right now, trading out at 1232.90. Now, a key level to be watching inside of gold is really going to be 1230.60. If you close below that, that'll be the first time we see a close below its daily TAS market profile. Not a good thing. This is a profile that formed a couple of days ago, neither bullish nor bearish out here, and this should be a level of support. However, we can see, if you're watching us on TigerTV, you can see the rising price channel out here. Those are the diagonal yellow lines, lower left to upper right. And today is a clear break of that price channel. So we can say that the trend, for the most part, is no longer its friend. Now, look, we can draw a trend line in there, and we shall, right? We'll just come off of the bottom, looks like down here on December 23rd. And so even that trend line is failing. Not by much, but failing. So look, it's very simple out here. If you see a close below 1230.60, there is more downside to come inside of Goldilocks. Where will that downside end? Well, for that piece of news, we have to go take a look at what's going on inside of the euro, I would say. That would do not the euro. You thought I was just kidding you. We'd have to go see what's going on inside the Japanese yen. And in this case here, it says, I want to get weaker. At least go ahead and make a trip up into its weekly point of control, the center of that box out there. And in this case, it truly is the center of that box, which is priced out at 115.17. Price above a significant level of resistance. That means perhaps that becomes support, 113.70. But at a minimum, we ought to see the yen motor on through the Motor City to higher highs. That would be the 115.17 area. It could even overtake that and head all the way up to 118.66. In either event, the likelihood of gold holding that support level, that all-important support level, is not good. Because as this currency pair moves higher, so too should gold and silver, for that part, move lower out here. So be careful. We've talked about the GDX. We'll go ahead and put that up on the screen. We've talked about it, and we can see that this is now breaking through what we'll call level 1 of support. That was the breakout area from January 5th. Level 2 would be the top of that gap. That's what it's into right now. That's at 22.01. We're trading at 21.98. What this really says to both you and I is we should anticipate that the GDX is going to go ahead and pull back into about the 2071 level. Now, remember, we took a look at that other chart of the XAU. It's on a different screen out here that said we may start to see a pause button. So all that really can kind of come together right around that price area. But at this stage here in volume today, let's go see what the volume is. But, you know, volume, schmolium, which all that means is just really volume is just one aspect of the move. In this case here, hey, this is good volume, schmolium, because it's 38 million shares pulling back. So we've got lightish type of volume out here, and that's a good thing. But the trade to get into the GDX, it is not here right now, at least not as of 1:33 in the afternoon. Just keep your stops in place if you're still in this trade, and you got to always keep your stops in place. That's just simply the routine. That is the deal out here. Okie dokie. What else do we want to look at? Oh, I know that Bruce sent in a message. Dr. Bruce. Bruce, thanks for taking the time to write. Asked me if I would take a look at the long-term charts and find some kind of top. Okay. Well, I will do my best. Let's start off by taking a look at, let me make one change to this chart here. And take that down that window. Okay, good. Okay, let's take a look. We don't look at this chart or a chart like this too often, but let's go do that. And as we take a look at it, we're going to go back and take a look at the Rhodes momentum indicator out here. You're going to see green and red boxes out here. Now, when you see these red boxes, what it tells you is you have got strong momentum going on out here. And when you see a green box, that's where, in essence, it helps us to identify uptrend. And when we start to see closes above that high of that session. In this case here, we're looking at monthly charts, S&P 500 monthly chart. In fact, this question here from Dr. Bruce goes, we'll just call it Dr. Laura. It wasn't Laura that sent it in, but it just seems like I should do that because we've got doctors in the house out here. And Laura actually had sent in a email and said she had just watched Mark Faber. Is he a doctor too? I don't know that he is. Dr. Killjoy, I think, really, right? Boom, gloom, and doom, and everything else out there, and said that we're in store for a 1987 crash. At least that is how Laura had positioned it and wanted to know, do I see the same thing? So we can take Dr. Bruce and Laura's comments and try to figure that out here. Now, one thing is for sure. Typically, when markets form tops and bottoms, but when they form tops, it's usually when they are stretched. And the way that we take a look at those stretch marks inside these markets is with Stevie's black lines out here, right? Where we see that black diagonal line, just as we did back in 2007. Let me get my crosshair out here, followed up by a bearish reversal signal. You see, this is just it is just simple stuff if we just follow the rules, because we will get those signals that tell us whether there is a top in place or not, just like we took a look at inside the ES-Mini on a 30-minute chart out here. If we go back and we take a look at, so both for you, Laura, and for you, Bruce, we take a look at the highs back in 1999 out here, we can see we had the same type of signal. We had a nice little dark cloud cover. You can see price below Stevie's red line out there. And this is the kind that both Democrats and Republicans like, right? Everybody likes Stevie's red line out because it really keeps us on the right side of the trade out here. You can see when the market was forming its bottom back in, whoops, that didn't work out here. This was what, March of, come on, do this. This is what, March of 2003 out here. Price was moving lower, doing less running. So this is a really important pattern. Now, fast forward back to today. Where are we? That pattern does not exist inside the S&P 500. We are well above Stevie's red line, 2297.37. I cannot tell you whether Mark Faber is correct or not. I can tell you that that signal is not here as we speak right this very moment. Now, that's the S&P 500. Let's just say you were just a Dow person, and let's just go take a look at the Dow Jones. Now, we're looking at a monthly time frame out here. And you can see we've got nothing but red signals. Stevie's momentum indicator, that is extremely bullish out here. You can see that price is moving higher. It has got plenty of strength to continue. So that is the type of pattern that you would see at a significant top out here. And that's why I'm saying, Mark, you're wrong. Actually, I'd say, how long have you actually been calling for that major top out here? So as certain as he is that it might be, I didn't hear the actual comments there, Laura, the 1987 crash out there. Hey, anybody can forecast a crash. Eventually, it's going to happen out there. But I don't see the signals. I do not see the signals. Inside the NASDAQ composite, it's a little iffy, just a little iffy. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So for cause and effects out there inside our Tiger's Den, Kaz would like us to go take a look at the Nikkei. So let's go do that for Kazimoto. And as we look at it, here's what we are going to see here, Kaz. If we take a look at coming from the bottom out here, that big old bearish looking nasty red flavored candle out here, a red pop, a Fago red pop. How many of you have ever had a Fago red pop out there? I think Fago was from Detroit, was it not? Anyways, can't say that I've had one in a long time. But as a kid, of course. Now, if we take a look at that November 10th low out there, it formed wave number 7 right out here, looks like on January 5th. Goes ahead and moves lower. So-called a nice little top out there, nice little retracement. That was almost down into Stevie's dashed red line. That was a Tom DeMark setup where you have those 9 consecutive candle sessions with higher closes prior to the 4th bar back, and came down, found a level of support. Right now you are in wave number 4, and price is moving higher, doing less relative energy. That pattern showed up today. That is, in fact, let me get rid of these. Well, that's not going to do it. I don't want to. Forget about the market profiles that are out there. Of course, the easiest way to do that is for me just simply to vamoose them, and then it just clears it up just a tad. So these TAS boxes, we're just going to remove off this. Okay, so here we go. So now you can more clearly, even I can more clearly see it. With regard to, so you've got a topping-ish type of signal, but you do not have a bearish reversal signal. Today was a gap to the upside. Gaps are your friends. They are signs of strength. We have a sign of strength inside of the Nikkei. Its red line, meaning its oscillator unchanged line, is 19,387. You need to see it close below that in order to signal that, hey, guess what? Top number 2 is in place. There was a Tom DeMark sequential count just a few days ago. Back on February the 23rd is what it looks like out there. So you get close below 19,387. And then that would signal, okay, it's going to come back and at least test the swing point from back on January 18th. Whether it busts that out or not, that much I don't know. So that is what's going on inside of the Nikkei, Kaz. I hope that helps you out. So there's something going on with Cat. I was gone. I was out. So I see something in here from serial accounting fraud. Caterpillar out there. So Caterpillar, why is it not on my? It is on my screen. It's down 4.5%. Let's go take a look at the big cat, the big dog out here. But it can't be a big dog. It's got to be a big cat. Did I ever show you my big cat, the one from one that I took a photo of in South Africa, where I was literally only. I will not exaggerate. I think we were about 1, 2, 3, 4, probably maybe 6 yards, 18 feet, 7 yards away from it. I have to go see if I can find that photo. Just beautiful. In any event, with regard to Caterpillar, let's go figure out. She don't really give a darn, a hoot about that, do you? But whether you do or you don't, let's go take a look at this big cat out here, see what it is doing. So I'm guessing is there some news out on Caterpillar there, Mr. Z? Right now, there must be some news. You got big volume to the downside here. So there's some selling and some yelling going out inside of Caterpillar. 16 million shares already to the downside. Now, the question is, will this break a key level of support, which would be its TAS weekly profile low, which is 91.85. There's also a nice breakaway pattern out here on January the 9th that had a volume of 19 million shares. But you know what? You're starting to pull back with more volume than that. So it does look like there's problems. Technically speaking, it has not broken key levels of support, at least not just yet. It is trading below it's not trading below. It's testing also this hammer candle from February 24th. That low is 93.50. Of course, you close below that. If you're long, you're wrong. But you got to put that in perspective. It just means you trade down to the next level of support. In this case here, 91.85 would be the number out there. So I don't know if it's a rumor, if it's true, if it's this or it's that with regard to the big cat out there. Let's go take a look at Monster Beverage out here. I used to trade this and actually held it as a nice investment back in the 2006 timeframe, but it was underneath a different name. What was the name when it traded way back then? Everybody remember what was the original name for Monster Beverage? It truly ended up being one of the better holdings. Man, it looks like I should. Of course, this thing had gone through some splits and so forth. But in any event, let's go take a look at a Monster Beverage out here. That's a monthly chart. Let's go back to the daily chart out here. Looks like this thing is having a monster move, and of course I never actually tasted one of these drinks out here, but this is moving into a level where this thing, it's taking on an old level of resistance from a gap down back on November 4th with 18 million shares. You're up with 10 million shares. So any closes above, let me give you the exact number out here. Any closes above 46.63 says that this wants to run higher. Now, run higher to where is the question? Well, you go back to the swing point. You go all the way back into the August 5th level, somewhere between 53.93 and 55.50. Volume there is 7.4 million shares. So Monster Beverage having a monster of a day out there. Okay, what else should we go take a look at? 2 minutes left in this segment here. Let's continue looking at a couple of individual stocks. Haven't looked at this one here, Children's Place, in a long time, up about 5%, 470. Is there anything really here that this is doing? Well, yeah, boy, this had a nice breakout. So here's an equity, comes back to the breakout area. Here's where gaps are your friends. Let's not forget that. In fact, that's probably, the markets are pulling back. That's going to be the first test. It's going to be the bottom of the top of the Hanson Natural. Thank you, Kaz. It was Hanson Natural. You are the winner. And if I had a Monster Beverage or Hanson Natural, I would go ahead and give you one. Buy one on me. Send me the check for $2 or so. I don't. Of course, how much? Those things probably cost $5 for all I know. In any event, out here, PLCE. This thing broke out with 2 million shares back on November 17th, and the first test of that breakout was on. You got it. Are you kidding us? 283,000 shares out there. You want to talk about a test on light volume? Well, you got it inside of this equity. Now, there's some resistance out here at about 107 and change, and it will get up to 107 if it can clear 103.85. That's its next hurdle. So just really trading sideways, a little consolidation pattern out here, but nothing significant that we can see in Children's Place. That's a PLCE. CE with the ticker symbol. Let's take a look at to the downside. What do we got here? Annie Pharmaceuticals, ANIP, down nearly 12%. Volume behind its move, 612,000 shares. It's going to go and test the low from November 3rd, 47 and a quarter. That has volume of about 846,000 shares. And if it busts through that, then it is sayonara, back to its breakout. There's the old gap, and that would be $36.23. But first things first, with regard to Annie Pharmaceuticals out there, and not to be confused with Auntie Annie's pretzels out there. You must have tried one of those and you like them. Why don't they make the jalapeno ones any longer? I can't figure it out. They're so good. Steve Rhodes with TFNN. You right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Gerald Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. If you watch us on Tiger TV, you're seeing this picture here is from South Africa. This was taken just down the street from Basil's house as a kid growing up in South Africa out there. It was a kind of a nasty day when I was visiting that area. But here is Stevie's big cat out here, and right there. I mean, is that not just the most majestic, beautiful? And there was no close-up lens on this. Just your normal 50 millimeter type lens out there. And when he suggested that we not come any further, as you take a look at this, you can bet that we did not. But apparently, the big news on the big cat in the marketplace out there is CAT has been overpricing the equipment to the government. Is that the case? Well, in any event, so hey, we've got about 3 minutes left. What is it that we are going to, and by the way, that was at the Shamwari Game Reserve, which is like about a hour and a half drive out of Port Elizabeth over on the eastern coast out there. And I would amazing time. Actually, the thing that I learned, which was kind of interesting here, was the actual best time to go out there looking for all types of wildlife was because you're away from camp. Was during the rain. Although I got to tell you, it was nasty. With the rain and it was cool and so forth. But as soon as the rain passed and as soon as the sunlight came out, guess what? So too did all of the animals. And it was just like absolute heaven seeing and experiencing that. It made it worthwhile to just basically be uncomfortable in the rain out there. So in any event, I recommend that you do it. So what are we going to watch for during the next couple hours or so or into the evening? You know, we've got this pattern out here with regard to the ES Mini, and we want to watch to see how, that convergence has taken place. Now, the question is, and the way this pattern normally should work, especially in a market like we have, is we should see this bounce come into this 2388 type area. If the ES Mini tests it, rejects it, and starts trading lower, it is your first signal of a potential change in trend. It at least says the ES Mini is going to go ahead and move lower. And then you have to start taking a look at where would that be. You see, if it tests it and rejects it, what you then have, let me get rid of all of those moving average lines out there. Let me just put Stevie's red line out here. Then what you have, a test and rejection, you then have your price oscillator down here below zero. And there is nothing more bearish than a falling price oscillator below zero. And that would be the signal coming from the 30-minute chart for the ES Mini out here. With regard to the Dow, let me go try to find it. It's been stronger, I do believe. I do declare, than the ES Mini. Let's see if we can do this before we get off the air out here. It's just all the way down at the bottom in the Y section. And let's go see where we're at there. So now let me see. Yeah, so we're not down to the zero level. So we don't have that same. So it says that the Dow's been stronger. This little pullback here than the ES Mini, but it's about to have a convergence eventually as well. And you'd want to watch for a retest of the red line and then see what happens there. Right now, that's at 21,084. So for those of you that are trading throughout the day, evening, morning, you know what to be looking for. Look at this magnetic line out here and see if it holds. If price gets back above it, it's a very bullish message out here. Well, folks, it's been great to be with you on Terrific Thursday, but we've got more. Our man, our favorite polar bear, David White, he's up next. Tom O'Brien from 3 to 5. Andy Heck to take it on home from 5 to 6. I'll be back with you on fabulous, fantastic Friday. Have a great day. We'll see you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.